Welcome to Hub Hits. I'm Theo Argitis, the Hub's editor at large for business and economics. Today, we're digging into the federal government's surprising decision to forego a spring budget, a rare move that raises some questions about fiscal transparency and perhaps even investor confidence. To unpack what it all means, I'm joined by Rebekah Young, VP at Scotiabank Economics, and the leading voice on fiscal policy in Canada. Rebekah, thanks for joining us.
Thanks for inviting me.
The announcement came, a day after the cabinet was sworn in. How surprised were you that we're not going to get a budget this year?
I think we were all quite surprised that we know this government has a lot it wants to do and a lot it wants to do very quickly, and it set some deadlines July 1st. So the expectation had been that we would have a budget as soon as possible, and the assumption that bureaucrats had been behind the scenes now for some time getting budget ready for quite frankly a few months now. So I think the announcement that we won't see a budget, we won't see a fiscal update until the fall was, quite frankly a surprise.
And is it something that could have like an impact on, let's say, the financial markets? How do you think financial markets will see this, or is this just kind of like, a political surprise, but without any real impact on the lives of Canadians?
Well, I would say, first of all, just the context right now, it takes a lot to surprise markets. And obviously, there's a lot going on. And so I wouldn't overplay it that there's going to be a negative reaction. What I would say, though, is, budgets serve multiple purposes. So one clearly is a spending plan. So I would agree with what we've heard, from Ottawa is that, yes, we roughly know what they plan to do, that they've laid out a pretty comprehensive $130 billion spending package. You typically wouldn't see that all in a first budget, but we know that, broadly what they plan to do. We know what they plan to do by July 1st. So I would say mostly no surprise there. The spending side of what we would expect in a budget is there. But we also, in a budget, expect a fiscal path. We expect some sense of what do deficits look like? What does debt look like? And we also know that governments tend to stress test it. So they say if things are better, this is what it looks like. If things are worse, here's what it looks like. And so we don't have that. And if you think the last time we got an official update from the government was in December, and if you look back at those numbers, at that time the sense was we were going to see, growth above 2% real GDP next year. So we're nowhere near. We're, probably somewhere a percentage point lower in terms of our expectation of growth next year, and a lot of uncertainty. So I would say, from that, we don't have a lot of transparency. But just the third bucket of what you hear less about on Main Street, I would say what a budget serves is really that borrowing plan. So that does signal to markets, how much debt issuance will the government be, planning, and over what time frame. And so that we still don't have. And you could say, yes, we have broadly a sense of what they're going to spend. We could, do back of envelope calculations of, what shortfalls look like. But there is this non-budgetary side of things that, gets a little bit harder to tease out. And that's the stuff, especially when they're doing concessional loans or, leveraging their public dollars. You have a bit of a less of a sense of what, beneath the budget line will result in debt issuance, but not necessarily deficits. So there is a bit of haziness there around what does it mean for borrowing plans and just, how much they might be issuing. So, we know what policies might be rolled out, but a little bit less so on what it means in the near term for debt issuance.
Yeah, and you also get into the question of motivation. Why are they doing this? I mean, the explanation they've given is, look, we've got a throne speech, so we don't really need to make a political statement in the budget. We can use a Ways and Means motion to implement that tax cut we want, and they kind of also talked a little bit about, or Finance Minister François-Philippe Champagne in his interviews talked a little bit about the kind of volatility out there. But the problem is people might start reading into kind of like a different type of motivation. For example, maybe they're seeing that the numbers are a lot worse than they were expecting, for example, during the election campaign. And, they don't want to kind of put out numbers that could maybe undermine their ability to kind of implement their agenda. I mean, are you worried that kind of their motives might be kind of the sort of motives that would make you worry about the fiscal trajectory?
Well, I would, without sort of getting into the head of what they're trying to do or not do, I would say the numbers probably are worse. And so again, even so in December, the finance officials in their fall update gave us what the deficit profile would look like. Then we saw the PBO set out a new set of numbers in late March. None of those numbers incorporate what we've seen since Liberation Day. And obviously, things are better today than they were April 2nd, April 9th. It's been very volatile, but we're definitely in a worse situation, in economic terms, and therefore in, just those automatic stabilizers for, fiscal deficits than we were in late March. And so I think if we were to set out new numbers, we would already pencil in a deterioration. But again, mostly you need some, a baseline, some transparency. And I don't think by not revealing those numbers now, it's not going to make it better or worse, come fall. But what I would say is they have a lot they want to do. And so, when you try to tease out what will they move forward with first, what I tend to do when I look at platforms, and we've had, a fair number of elections in the last few years, 5-10 years, is you look at how much spending is in their platform in the current fiscal year. So we started the fiscal year April 1st, so our clock is already ticking this year, and they have 35 billion they want to get out the door this year. And of the 100 plus initiatives that were included in their campaign platform, about 90% of them have money going out the door this year. So they do have a lot of homework to do to figure out, to kind of formulate that into policy and put it into budgets. And, if you've opened a budget, as you have, as many people have, it's 300 plus pages long. So it is a big deal to, if they have more than 100 initiatives to, to program, they do have a lot of work ahead of them. And so, you could see this path where they have set some deadlines, July 1st, that they're going to focus on getting that personal income tax done. They're going to focus on the, the guaranteed income supplement boost that they had promised, and the internal trade commitment that they've made for July 1st. So that, would allow them to move forward pretty quickly on some of their big pocketbook promises, and then use a couple months to, build these other, almost 100 initiatives that they plan to run with.
Yeah, and more broadly, Mr. Carney has indicated that he will use the kind of the government's balance sheet to invest. He's been upfront about actually taking on a lot more debt than under the trajectory, the last kind of fiscal update of Trudeau. How comfortable is the market with the rationale and the scope of debt that Mr. Carney is planning to take on in coming years, not just this year, but kind of over the kind of the platform horizon?
I think the devil will be in the details, and just how he executes, how he defines that framework, and how rigid he makes those, the rules around what is capital investment. And so I think there'll be less tolerance for a more liberal interpretation of what qualifies as investment, that they'll be, looking for some hard, pretty strict kind of fences or ring fence around what would be considered capital spending. But at the flip side is that we know that markets have seen Canada as an underperformer when it comes to productivity. So this sense that more was needed. We also saw Germany move forward with, spending plans, especially around capital spending and defense spending. And that was viewed as more of a positive. So it would be premature to say markets are not going to tolerate this. But again, it comes down to how do they define it, and are they able to execute? So a lot of the plans depend not only on a very complex, multi-level jurisdictional framework that we have in Canada, it also involves getting private sector to the table. And right now, as we all know, it's so uncertain that, businesses, consumers are more or less sidelined while they're waiting for greater clarity. And that, that does raise an additional point when you think about, the implications of waiting or not waiting for a fiscal plan, is that, you do want to tailor your fiscal plan or your spending plan to the current economic conditions. And again, because of that uncertainty, I think what they promised on the campaign trail is about boosting supply, boosting the kind of the productivity enhancing side of the economy. Very little on the what you might call more classic demand stimulus, which you would typically use when you're in a very sharp downturn. And we're not there. But maybe there is a bit of optionality that they want to preserve in the event that we're on a kind of another shock from sudden turn in policy south of the border.
Rebekah, one last question before I let you go. Mr. Champagne has indicated we will get a substantive economic statement or fiscal statement in the fall. It could be a mini budget. We've had these mini budgets before in the past. But what that suggests, or what he may be hinting, is that we won't get a full budget until maybe next year. Which essentially will mean that it will have been 2 full years between full budgets, if that's the case. I mean, is that something that is a concern kind of beyond the kind of delay we're seeing over the next 4 or 5 months, having 2 years between full budgets?
Well, so I would say over the last few years at least, it's more like we've had 2 budgets a year. And so, yes, they're different in name. We have a fall update. Sometimes it's a fall snapshot or, a fall statement, but it essentially is a budget. It serves more or less the same purposes, and they've, packed a lot of spending in the fall and then packed a lot more in the spring. And so I'm a little bit less fussy in terms of what we get. They can do, spend in either the budget or the fall update. I think the issue, though, is that you want to provide Canadians, you want to provide markets with a fairly regular update of, how you see the fiscal path unfolding and how, spending, is folded into the mix. So you want that transparency component. And so I think that's where you just want these regular updates, and especially, one could argue, in a time of heightened uncertainty, you want to give the confidence that you've stress tested your plan against a range of scenarios. Even if you have to lock in on a baseline for planning, you want to give that confidence that, yes, we've thought of the different ways things might unfold. We still feel comfortable with the plan that we're setting out.
All right. Well, Rebekah, thank you for joining us on Hub Hits, and thanks to all of you for listening.
Thank you.